Hey guys, and welcome to another episode. If you're not familiar with the characteristics of market sessions and are simply executing trades at random times throughout the day, you are missing an important aspect of trading: the timing. In this video, we're going to share a powerful trading plan we have developed using the concepts of ICT kill zones. We will explain what the London kill zone is and how to use this knowledge to your advantage. We will show you how to read the price action and market structure like a professional trader when the kill zones start, and how to identify liquidity levels, supply and demand areas, and best trading opportunities. If learning advanced trading concepts, strategies, entry reasons, and how to stay disciplined with a trading plan interests you, subscribe to our channel and enjoy advanced trading content. See you after the intro and disclaimer. So, what are the kill zones? Kill zones are basically the important times of the day when a lot of liquidity is injected into the market, providing perfect trading opportunities. In this video, we're exclusively focusing on the London kill zone trading strategies. So how to identify the London kill zone on the chart? Open the chart on TradingView and simply select the Indicators tab. Here, write Market Sessions and click on the indicator provided by Leviathan. This indicator shows all of the sessions, so we need to make some adjustments. So, in the Settings tab, first uncheck the Tokyo, New York, and Sydney, and then change the close of the London session to 13 o'clock. Then we are going to have our London kill zone marked on the chart. We also need to enable our period separator on the TradingView platform, so right-click on the chart and click on the Settings. From the Events tab, select the Session Breaks. Then the vertical lines dividing each day will appear on the chart. Now, why do we even need to mark the London session on the chart? Well, the London session has some unique characteristics that make it different from the rest of the trading day. A lot of liquidity is injected into the market when the London session begins. In this session, we have euro, pound, franc, and gold, which are being actively traded. So, the pairs with these currencies will make the movements we want to see in the market. The second factor is that when the London session begins, new participants join the market, making it move differently than in the Asian session. So we may witness new trends that are forming on the chart. The third factor is that the levels created in this session have more value for us. Usually the high and the low of the day are created within this trading session. So, the conditions are ready to make the most out of the high-probability trading opportunities we receive. Now, how to use this knowledge in our trading system. The Asian session has one of the highest amounts of liquidity accumulation. For example, look at this chart. Here we have euro-dollar on the 15 minutes. This area has strongly rejected the price twice in Asian session. We have a long wick rejection followed by an engulfing candle showing strong selling pressure. Traders who sold here placed their stop loss above this wick. So, we have lots of liquidity gathered above this area. Now let's see what will happen when the London kill zone starts and new traders jump into the market. First, the price goes higher, sweeps the liquidity above this wick, then completely falls, and aims to the liquidity gathered below the day's low. As we mentioned earlier, new participants join the market when the London session begins, which makes it move differently than the Asian session. So, new trends and market structure form on the chart. Once again, here, when the London kill zone begins, we have a liquidity sweep below this low, and then the market starts a completely new trend to the upside. Now, how do we know that the break is not signaling continuation, and it is but a liquidity grab? Here are two key indicators. Number 1, the fakeouts. A fakeout or a failed breakout occurs when the price breaks through a structure level, but immediately gets back into range. Imagine we are in an uptrend, and the market breaks through a resistance level. So if the market returns to this area, resistance becomes support, and we expect rejection. But if the market breaks right through, we call this a fakeout, and it indicates a significant momentum on the opposite side of the direction and signals a possible direction change. So, the fakeout is an early signal that this movement is nothing but a liquidity grab, which is later confirmed with a change of character. To identify a valid change of character, first, we mark the lowest point of the latest swing low that created 2 consecutive highs. Then if we get a break and close below this low, it signals a possible shift in the current trend and confirms the fakeout. Now let's return to the chart and read price action where the London kill zone begins. But before we continue, if you want us to make more videos more often, don't forget to like this video to show your support and comment below, and tell us what topics you want us to cover in future videos. Now let me explain to you step by step what we are looking for when the London kill zone begins. First of all, we will start the technical analysis with 1 hour's chart. In this time frame, first, we will identify the market direction since we want to trade with the dominant trend. Then we will point out the key levels and important swings that might reject the price. You can also do a top-down analysis to see an even bigger picture. However, don't waste time identifying the direction and market structure from the monthly time frame if you want to trade in the 15 minutes. Only 2 time frames higher than your entry is enough to combine multiple charts. In the second step, we will zoom into the 15 minutes chart to enter the market. Here we mark the most important and recent liquidity areas, including the current day's high and low that formed during the Asian session. And then, we usually witness 3 common patterns that happen when the London kill zone begins. In the first scenario, the price heads for sweeping liquidity beyond the high or low of the day that the Asian session created. Then the price continues pushing in the same higher timeframe direction. After the liquidity sweep, we will apply the smart money concepts on the chart. This includes identifying fair value gaps, supply and demand areas, order blocks, break of structure, and eventually optimal trading opportunities. Then we will place our position aligned with the current trend. Now, let me explain the other scenarios and have some real chart examples to drive the point home. But remember, before placing any trade with real money, you must backtest your trading plan at least 100 times on the different pairs to obtain the performance and required confidence to trade. But, unfortunately, the backtesting could be really time-consuming. That's why we use TradeReg to help us save time and energy and keep track of all our backtests. This software allows us to do backtesting 3 times faster than spreadsheets and keep track of all our backtesting results. Once we're done with the backtesting, TraderEdge will provide a detailed matrix, including important information such as the win rate, maximum drawdown, profit results, and more. So if you would like to utilize this software and find the performance of your trading setup before trading live, check the link in the description. Now, in the second scenario, the market has gathered enough liquidity before the London kill zone begins. So the price continues to move in the direction of the higher time frame. Once again, we can make optimal trading decisions by combining the higher time frame direction, key levels, and lower time frame confirmation. In the final scenario, the price heads for sweeping liquidity beyond the high or low of the day that the Asian session created. Then we witness a complete shift in the market direction. Now let's see some real chart examples to show you step by step what's going through our mind when the London kill zone starts. Here on the pound-dollar 1 hour's chart, we have a moving uptrend. The market continuously breaks the structure levels to the upside, which shows the buying pressure. Now we will identify this market as bullish and look for long opportunities as long as we stay above this higher low. Another key level is this recent high created by the price, which is our higher time frame target. Now let's zoom into 15 minutes chart. First, remember that the higher time frame direction is bullish, so we are only interested in buying this pair. Now we will mark the important liquidity zones, which are the high and the low of the day created by the Asian session. We know for a fact that many traders have bought this pair in this support area, so an optimal scenario for the big player would be to push the price below the low of the day, grab the liquidity they need, and continue pushing upwards aligned with the dominant uptrend. Let's see what will happen. Now an aggressive entry would have been buying this pair when these candles closed back in the range after this fakeout occurred. But a more conservative way is to wait for a change of character to confirm the reversal and enter at the pullback. Conservative trading is more relieving and less risky. However, we might witness many missing opportunities, which is inevitable in trading. Here on the pound-yen 1 hour's chart, the market was in a strong uptrend until it reached this level. The price rejected this area multiple times and was finally reversed, giving us a bearish bias. Now here we have the opportunity to go short, and our target would be this unmitigated demand order block in front of the price. Now let's zoom into 5 minutes and look for short opportunities. Here on the 15 minutes chart, we can see that the price is printing large candles with fair value gaps, which indicates bearish momentum. This is the high of the day, which contains lots of liquidity above it. However, we can see that right now, the market has enough liquidity. It has created an unmitigated order block, providing a perfect opportunity to go short with the dominant downtrend. So we can place a sell limit precisely at this order block and target 2 times our risk. Once again, we have clean, fair value gaps, a break of structure, and another bearish order block. So let's place another sell limit since we still have time before the London killzone ends. Now these were some examples of how you can read the price action and market structure when the London killzone begins. But remember, always be patient. If the trade does not align with your trading plan, you can always pass it. More trades do not mean more profit. So waiting for high-quality trades and filtering the low-quality trades is an important skill to develop. So guys, I hope this video provided value to you. If it did, please go ahead and smash the like button to show your support. And if you're new here, consider subscribing to our channel. See you in the next episode.